Excellent. Welcome, everybody. I'm Xavier Martin, Deputy Director at the Digital Frontiers, and I will be introducing this session. This morning or afternoon, depending on where you are, I have the pleasure of introducing Steve Hawley, Director of Market Development and Partnerships at the Mojaloop Foundation. Steve is a passionate advocate of inclusive instant payment systems, and he has collaborated with our IIPS program at Digital Frontiers for a long time, sharing his knowledge and the ton of experience that he has accumulated from the many years working on actual payment system deployments. So welcome to Pathway, Steve. Today, Steve is going to talk about open systems for inclusive payments, what it means to make payments more inclusive, what is their significance for financial inclusion, and what are the challenges or barriers that we can identify to their growth. Steve, the floor is yours. We are looking forward to hearing what you have to share with us, and I'm sure that there will be also questions from the audience after that, and I also probably will have some questions. So welcome to Pathway.
Okay, thank you, Xavier. And it's a pleasure to speaking to everyone today. I'm going to be talking about, like Xavier mentioned, I'm going to be talking about inclusive instant payment systems and the benefits of them being open. I'm going to speak to it from a perspective of Mojaloop and the problems we're trying to solve. But it's not to say that Mojaloop is by any means the only option to solve some of these problems. So first, what's the problem we're trying to solve? We're trying to solve the fact that a lot of people in the world, billions in fact, still use this as their payment mechanism. They still have to walk from place to place to make a lot of payments. And that costs time, it costs money and effort that hopefully we can reduce in the future. A lot of progress has been made over the years in terms of improving this, and largely through mobile money. The explosion of mobile money in a lot of countries has given huge opportunities to a lot of people to avoid using their feet and start using their phones. However, there's still problems with that. And that's that there's these silos of systems, particularly including mobile money. Now, as we've started to see those different systems connect, you've seen banks connecting to MFIs and banks connecting to mobile money connecting to a few MFIs, but you start to see these bilaterals between different types of financial institutions that serve the last mile. And what we think is that it would be much better if there was a single network that served all of those financial institutions that are serving the last mile, rather than these bilaterals. And the idea is that interoperability will enable innovation to make payments inclusive and affordable, while pouring money into the transaction economy and supercharging the ecosystem. The more money is digitized, the more money is in deposits, the more money can be lent out, et cetera. So again, mobile money was a great first step, but now we have to think about the interoperability of all financial institutions that serve that last mile. Now, real-time payments as infrastructure is not something new. It benefits the top end of the market with convenience and innovation, those of us who like to send money over our real-time payment rails, but also SMEs and the underserved who are largely excluded from the formal economy, as long as they're inclusive. And we'll get into what that means for those instant payment systems to be inclusive. And so when we talk about inclusive real-time payments or inclusive instant payment systems as infrastructure, there are a number of benefits to central banks, governments, but economies as a whole. And first is that they can be built and operated by public institutions rather than relying on entirely on private sector payment service organizations and payment companies to provide those transactions and those operations. Secondly, digital infrastructure supports public and private sector innovators. If you have a public infrastructure for a country, then the government entities and the private sector entities know where their space is to innovate. It gives them clarity for them to innovate, clarity for them to invest, rather than asking people to invest and maybe later on taking it on as national infrastructure. It provides a channel for regulators to directly address financial stability concerns. They have visibility over all transactions, whereas as it starts to replace some cash. Most importantly, on an inclusive real-time payment system, banks, fintechs, mobile money providers, microfinance are all operating on the same regulated platform. They're all treated as equals. And that can create network effects that lower the cost and improve processes for all types of financial institutions. And lastly, it allows the central bank to use whatever they would like to use for settlement, whether a CBDC or fiat currency, whether through a conglomeration of commercial banks or their own central bank. Now, real-time payments or instant payment systems are nothing new. We see them all over the world. This slide is actually quite old. It's much more than 70 countries currently have operational real-time payment systems or instant payment systems. I don't know of a single country that isn't at least having it on their roadmap at the moment. But we do want to say that the difference between an instant payment service and an inclusive instant payment system are very, very big. And that's where we're going to get into talking. It's not enough just to have an instant payment service. It has to be an inclusive instant payment service to solve the problems I was talking about at the beginning. So how can Mojaloop help with doing that? And again, we'll get into how Mojaloop can help, but hopefully identify what are some of the design problems that normal instant payment services have that regulators need to think about. Now, first of all, it has to be interoperable. It has to ensure that last mile customers can spend their money at whatever financial institution they operate with, they work with, whether a mobile money provider or a microfinance institution or a credit union. It should be instant push payments. Push payments can be settled later on, but are cleared instantly, giving more the feeling of cash and that kind of security. That also allows for lower fraud risks and costs, so that those payments can be offered at a much lower cost. And last mile ecosystem support. Again, if you're not offering things like open payments and third-party payment initiation, if you're not offering for mobile money providers and agent networks to connect directly into your instant payment service, it's not going to be inclusive because it's not going to reach that last mile. So what does Mojaloop do specifically? I mean, it is an instant payment system, a software for instant payment clearing, and it's built specifically to help hub operators drive financial inclusion, and it was developed from the ground up with mobile payments at its core. That's different from a lot of other switches that might be looked at that were built primarily for bank transactions initiated by a teller. And very different when you want to initiate all of your transactions from a mobile device. It was built for local ownership and optionality, meaning you don't have vendor lock-in. It was built to have lower cost for very low transactions, built specifically for sub $1 transactions. It has lower cost and risk for different classes of financial institution. Again, making sure that the banks, mobile money, microfinance, credit unions can all operate together. And lastly, integrated support for local fintech community. So I'll talk through what all of those things mean a little bit later on. But again, we would say those are things that in order to have an inclusive instant payment service, a national hub operator and a government, a central bank, should probably look for. So some of the design considerations we went into, again, equal participation of banks, small banks, MFIs, mobile money, through the way we design the APIs and the way we designed the security and liquidity management, so that no matter what level of technology exists at the financial institution, the security won't be affected. So a big bank doesn't have to worry that a small institution is connected. And that tends to be one of the biggest problems when creating an inclusive instant payment service, is that big banks have different risk portfolios and risk profiles than smaller financial institutions. And often they'll refuse to be a part of the same service because it can create high risk for them. Mojaloop was designed to overcome that challenge. Identifying recipients by personal attributes like phone number, email address, or another alias, national ID, rather than a bank account information. So no bank account information, no KYC information is passed through Mojaloop. And we think that protects not only the clients, but also protects the financial institutions. And it also helps for financial institutions that don't use bank accounts as the primary mechanism for identifying a client. Fewer human interventions for disputes. Now, Mojaloop has a lot of design components that make it lower cost for, lower human intervention for those disputes, but that's something that anyone designing an inclusive instant payment service has to think about. If you're going to be focusing on sub $1 transactions and billions of them every month, then you have to find a way to make sure that your disputes are managed very, very cost effectively, because otherwise every transaction costs more than the amount of money moving. And so it really has to be designed with that in mind. And lastly, third-party payment initiation for fintechs to join at the scheme level. What that means is we think that third-party payment initiation or open, like an open banking API around payment initiation is actually going to be the driver of transaction growth. This is what we've seen in India in particular, but a number of markets as well, is that third-party payment initiation, or 3PPI, has been the thing that has caused exponential growth. And we think that's going to be something that most countries need to be looking at if they want to be more inclusive. And that's largely because if often fintechs are much better at acquiring merchants and acquiring customers than, especially at the last mile, than banks will be. And allowing fintechs to participate at the scheme level allows for more merchants and customers to be acquired and brought into the network. So the advantages of it being open source, again, there are other options out there, but we don't think there are other options that are open source, is that it can be locally owned, locally operated, locally governed, and locally stored. There is no dependency on another vendor. You can always find a local system integrator to operate it and run it, or you can work with an international integrator to do the same. Key advantages there is control. And that means that when you build scheme rules that you want to be inclusive, and that's really the driver of inclusivity in an instant payment service, is the scheme rules. You want the technology to be conforming to your scheme rules, whereas very often it's very difficult for a vendor to guarantee that they're going to align with the pricing model or the other scheme rules that you're going to put in place. Whereas going with an open source where it's locally owned and locally operated, you have complete choice over your scheme rules. Other advantages being the lower upfront cost and the lower maintenance costs, largely because of the vendor optionality that you get, and the lower cost to acquire additional functionality. And that's because you can rely on the community. So right now, for example, everybody is looking at static QR payments as the merchant experience. And that's probably going to be the standard globally for the next few years. But what happens if it changes? Working as part of a community, the costs to change that are going to be spread across all of the adopters rather than one particular country. And another one we're seeing coming is central bank digital currencies. Once one country has made the adjustments to account for central bank digital currencies, then all of the other adopters can take advantage of it. I'm not going to go into too much of the hub. It manages most things that any hub for a national payment system would manage. I will note that we have a component called Payment Manager, which you'll see in orange. And what Payment Manager allows is for those small financial institutions and MFIs, wallets that don't have a very modern core banking system with the capability of managing real-time 24/7 transactions, which is probably 80% of financial institutions in most markets. This is a free software that we provide that helps them participate in a Mojaloop network. I've talked about the 3PPI extension quite a bit. And what that means is that fintechs are treated as first-class citizens. For any country that's looking at how open banking and third-party payment initiation are going to drive transaction growth, it's awesome to do that. However, one of the things to think about is that if a fintech has to connect into each and every financial institution individually, that means you're going to have a bias towards the large financial institutions and the large global fintechs. By allowing fintechs to participate directly at the scheme, directly at the hub, it means that the small financial institutions can take just as much of an advantage of the fintech offering as the large financial institutions. So even a rural bank can participate with Google Pay or Amazon Pay in the same way as a large urban bank would. And the same is true for your local fintech communities. Very often those big tech players are great, but they might not serve the specific needs of a particular market. And by allowing fintechs to participate at the hub level, it means that smaller local fintechs don't need to go around and spend all of their time integrating into all the different financial institutions. And that's particularly in markets where not everyone has a smartphone. Our third-party payment initiation was designed to work also with USSD and agent networks. And we think that's going to be key in a lot of markets. So again, if you choose not to use Mojaloop, fine, but make sure you're asking for these as some of the components you'd like to drive to be inclusive in your markets when it comes to instant payments. I've talked about CBDC. We've recently launched a CBDC Center of Excellence with the Monetary Authority of Singapore. And we're not sure when CBDCs are going to be coming along, but we think it's coming soon. And we'd like to make sure that as CBDCs develop, they develop in an inclusive way, in the same way we hope that real-time payments develop in an inclusive way, starting with primarily focused on cross-border settlement. For deployment options, and I'm just about done here. For deployment options, I'll go through this very quickly. If a country is looking to deploy or a hub operator is looking to deploy a Mojaloop, just like any other open source software, they can partner with a global system integrator for implementation and maintenance. And basically, it's like buying an off-the-shelf software from a vendor. Or they can go through our training program and have a local system integrator provide maintenance. Or they can do a combination of both and have it be a handover to a local team as the system gets developed. Quite similar for the ongoing operations. It could be outsourced to one of the global operations teams that's currently working in Mojaloop, or again, through the Mojaloop training program, it can be outsourced locally or brought within a central bank, or again, any type of hybrid. Because the system is open source, the ownership can be shifted very easily. And so that's what I was talking about with the optionality at the beginning. All right, we support our adopters in a number of ways. I'm not going to go through all of them, but primarily through the community that we have, the use case blueprints, not just the technical documents in the code, but also some of the tools for actually building a scheme. Our community is actually quite bigger than this. We're in over 50 countries and have over 800 members in our community. Some of the institutions that have joined, and this is growing quite quickly, as members of the foundation, including Digital Frontiers Institute. I'm going to go through 3 of the live systems that we have before we open up for payments. So we have the Tanzania Instant Payment System, which is the national payment system of the Bank of Tanzania, which is currently in closed user group testing. We have WinePay, which is a real-time payment platform serving a very specific need, which is often left out when we think about national payment systems, which is the ability for a microfinance institution or microfinance client to both repay and receive their loans in a wallet or a bank account. And normally that means that a MFI has to have an individual relationship with one wallet or one bank. But with Mojaloop and with WinePay, all of the wallets and all of the MFIs can transact with each other. And then the other one is Mojaloop, which provides interoperability between wallets of both Orange and MTN in a number of markets, primarily for cross-border payments. That ends my presentation about Mojaloop. I hope that I was able to talk through some of the design components that we think are critical in order to make sure that instant payment services are inclusive.
Steve, thank you so much. And you did that in the 20 minutes, exactly at 20 minutes that you asked for. Right. So I really appreciate on that. I have some follow-up questions on your presentation, but first, I see that we have one question from the audience, no? Mr. Sarwar Akatar, Joint Director from the Central Bank of Bangladesh, has a question for you that somehow you cover part of it, but maybe you can develop a little bit further. about how the equal participation in the scheme affects the participation of small banks and MFIs. Maybe you can talk like more about that.
Okay, so I mean, it's an excellent question, and I love how it's worded. So, of course, it puts burden on the small banks. I mean, the burden of participation, but hopefully, what we tried, and this is it's actually the burden of participation is for all financial institutions. There's a cost for them to connect. There's a cost for them to do ongoing operations. There's a cost for them to manage disputes. There's a cost for them to offer a service to their customers. So there's always going to be a cost to any financial institution. Generally, small institutions and MFIs, that cost and that burden is too high for them. And so there is always going to be a cost and a burden. But what we're hoping to do with Mojaloop is minimize that cost, again, by providing some software tools that allow them to participate more easily. We've been able to get microfinance institutions with very basic core banking systems connected to a Mojaloop in a matter of weeks. And then also, again, through the way disputes are managed and the way security is managed, with a lot of systems, you have to actually set up a point-to-point connections and between the hub and the financial institutions from an infrastructure and networking perspective with VPNs or KF fiber or whatever it might be. Mojaloop works over the open internet with the same thing that we use to secure all of our financial transactions over the open internet. And so it's much easier for smaller financial institutions and MFIs to participate. So still is a burden, but significantly lower burden than any other option that's out there, we believe. But it would always be their option to participate or not. I hope that answered your question.
Thank you, Steve. During your presentation, you also have talked about Mojaloop Foundation being like an open loop system. So what are the advantages of an open loop system versus the closed loop systems in creating payment systems that are really inclusive?
So when a system is an open loop, when there's a closed loop system, it means you have to have an account at the same institution or a small group, a small number of financial institutions who are involved. And it means that adding another financial institution to that system or another group of accounts or another ledger or whatever it would be is a significant amount of work for all of the participants. In an open loop system, it doesn't mean automatically that an open loop system involves every financial institution instantaneously. It just means that adding new financial institutions is much easier to do. There's a simple process. And if I add a new financial institution, it doesn't add burden to the other existing financial institutions in that system. And I mean, the huge advantage there is that it's interoperability versus collaboration versus interoperability via monopoly. And when you have interoperability via collaboration, it opens it up for, again, those financial institutions and fintechs and others who currently serve the last mile to continue to serve the last mile, but with connected accounts. Whereas if you, with a closed loop system, you're relying on the monopoly to reach those folks and to reach them with the products that they need. And if the products and the products that the last mile needs are not the most cost effective for that one provider, then they're not going to offer it if it's not the most profitable one. So having an open system is required if you want the innovators who are going to be able to serve the last mile to be able to be joining.
Thank you, Steve. I like the way that you frame it, no, in terms of this balance between collaboration and competition. In that sense, following up on that, you think that interoperability can always help in terms of creating a more competitive, collaborative environment or ecosystem? Or do you see also some risk in terms of interoperability having some bad effects, no? In terms of maybe not contributing to creating the business case for entities to be profitable. So do you think that there is like a right middle way to go with interoperability, or what are your thoughts on that?
I mean, I think when you introduced this, you mentioned I was passionate about interoperability and payment systems. So I have my opinion. My opinion is if your business model is not based off of interoperability and you complain that this is not good for your business, then find a new business model. And specifically, the thing that most people refer to is that when worrying about that, there's a few things, but one that people often refer to, and I think that the jury is out on this. There's a few. One is mobile money providers who have invested in an agent network and saying, well, it's cost us a lot of money to build out this agent network, and interoperability is decreasing that agent network, our ability to maintain that agent network. That could be the case, but we have to think about what's the alternative. The alternative is not don't do it. The answer to that is, cool, let's find a solution to make sure that those areas still continue to be served in an interoperable manner. Because cash in and cash out at agents is one of the most costly parts of the last mile financial ecosystem. And so the more that we can digitize those transactions, the lower the need for cash in and cash out agents is going to be, which means, yes, the number of cash in and cash out agents is going to decline. And so, yes, the companies who depend on cash in and cash out agent transactions is going to decline. I would say that's a shame, but the profits of mobile money companies is not necessarily what my objective is. But of course, we believe that mobile money companies and those who run agent networks should be participating and having a voice and have a say in the scheme rules of the system. And so I'm not going to design the scheme rules for them. They should be designed. They should be part of the group that designs the scheme rules. And so just because that happens to be my opinion doesn't mean that's where the scheme rules are going to go. A Mojaloop implementation can support any scheme rules that the participants want. And you can design those scheme rules in a way that protects the interests of agents. There's another one that I want to talk about, which also gets a lot of people concerned lately, which is the idea of interoperability and free transactions. And so there's a lot of companies or a lot of financial institutions are very concerned that, well, if I have to offer this for free, how can I possibly do that? Because it costs me money. And this is where we think that third-party payment initiation is crucial. So the more transactions you have, the more money gets digitized, the more money is held on deposits, the more money can be made off of lending those deposits out. However, the gap between when you start building the network and when financial institutions start seeing their deposits rise is going to be a number of years. And so there has to be some way in which that 3 to 5 year period where we start to see deposits rising can be covered. So I validate those concerns, and we would say that within the scheme rules, they should be considered, and Mojaloop is open to any scheme rules that participants would like.
Thank you so much, Steve. Unfortunately, we're just about out of time for the session. We just have one minute left. So Steve, it has been great to have you again with us, sharing your insights on inclusive payments and the work that the Mojaloop Foundation is doing to promote more inclusive payment systems for a more sustainable world. We look forward, as always, to having the chance to work with you again soon in the future. And audience, thank you for your attention and participation. And I'm looking forward to the rest of the summit, and I hope to see you there. So goodbye for now. Thank you so much, Steve.
Thanks, Xavier.